Good morning, everyone. Using Streamlabs here, so this is what we got going. I hope you're all doing well. And it is Wednesday, December 6th. Wow, so we're going to be talking about a few different things. And the oil market specifically, as we have seen, as you can see on the screen, right? WTI crude futures have been dropping exponentially over the last few days, last few weeks. And right, I did look for a long oil opportunity. I still think there is a solid opportunity for that if we get even more of a pullback. But the way that this is shaping out right now, we have CL, right? West WTI is down 22% in the fourth quarter at an average price of steady state. Gasoline is falling 6%, 16% to $3.21 a gallon. It comes as the U.S. continues to pump crude at a record rate, cranking out a record 13.2 million barrels a day, which is more than the oil exporting heavyweights Russia and Saudi Arabia. So the developments have been a boon to the American consumer as well as the Federal Reserve, which continues to receive much applause for the market from the market for keeping inflation at bay. And right, oil prices are one of those factors that attribute to those inflationary metrics. So. OPEC members have been forced to respond to record U.S. production, with tensions most apparent in the reactions from Kingpin Saudi Arabia. So far, the kingdom's strategy has been to slash more output, but the deeper cuts have not resonated with oil bulls and have even formed some cracks within the OPEC Plus group. Economic weakness in China, Russia's shadow fleet, and the removal of fear premiums from the Israel-Hamas war have also helped contribute to oil's decline. And the Saudis are hesitant to go nuclear by opening the taps, which would dent U.S. shale, but cause it to lose many OPEC friends in the interim. So many have also been eyeing the recent developments to see if whether the U.S. Will refill the strategic petroleum reserve, which has fallen to the lowest level since the 1980s, following a release of 180 million barrels last year. At the time, the Biden administration said it would refill at or below about $67 to $72 per barrel, but there have been opportunities that have been passed up when Royal Oil retook that range, and WTI crude now is trading at $71, while the administration has been adding the SPR. The buybacks have been limited to about 3 million barrels per month, given physical constraints, in a way that the caverns are set up. So the way, right, I'm looking at that little green box that I have on the screen, I wanted to see if oil could sustain that 74 region. We got some bounces. We failed multiple times to break above and close above that 81, which was, right, not a good sign realistically for the upside and the bulls on oil. I think in and around that 67, 68 area, as they were planning to replenish in the U.S. Petroleum Reserve, it seems like I think it's a solid opportunity to see if we can get that climb back up as we enter these winter months, seeing if we can potentially push crude into that $100 mark. Now, I still like the potential of commodities, especially oil, on the upside in the coming few quarters. So this downside movement here, I think, is just mainly a blip, and I do like the opportunity, obviously managing risk, not to see oil drop too much below $65, which would cause kind of a crack in the current pricing, and we could see movement below that even. So let's talk about the heads of Wall Street, right? The 8 biggest banks. We have JP Morgan, Bank of America, Citigroup, and much more. Naturally, will testify before the Senate Banking Committee today to warn lawmakers that Basel III Endgame proposal will hurt the economy. So regulators propose raising capital requirements for large U.S. banks in the summer, which the industry has repeatedly opposed. The purposed Basel III Endgame rule would unjustifiably increase capital requirements by 20 to 25% for larger banks. And JP Morgan's Jamie Dimon wrote in his prepared testimony, and Morgan Stanley's James Gorman will also warn lawmakers that the plan will drive more activity to a less regulated parts of the financial service industry. We continue looking at some of this economic news because economists who have forecasted the need for high unemployment, right? We saw that even Jerome Powell talked about this in a few meetings back, where he did mention that unemployment could mark, right, 10% to get inflation at bay. Now, a lot of economists were looking at very high unemployments also to keep inflation or get inflation at bay, but they're now, quote unquote, eating their words. According to U.S. Treasury Secretary Janet Yellen, we're not seeing the usual signs of weakening labor markets that would make you fear a recession, interestingly enough, because what we just saw on Sunday's open, we saw gold just rally super aggressively as the dollar got weak and the markets dropped, right? Which is the expectation that rate cuts would come. Rate cuts would come next year and sooner, which puts general fears of recessionary pressure now. So, interestingly enough, she keeps on saying things that end up turning out to be true. So her statement comes as the labor market steadily cooled in October while the unemployment rate ticked up to 3.9%, and the JOLTS report showed a larger than expected drop in job openings. So recall that Fed Chair Powell also said that the U.S. was on track to get inflation down to 2% without incurring a large job loss. So while markets await the ADP jobs data that's due, well, it came out today, right? We saw a little blip on the upside in the market and Friday's non-farm payrolls pre-market. We have analysts that explain that we could see that continued cooling realistically, which is going to look like it's going to want to put upside pressure in the overall markets. So if we take a look at the S&P 500 futures, right, where this is, let's see here. I don't know where so where are my profiles here? What does this do? Nope, that's not what I wanted. Let's put this, nope. Maybe we just look at the ES here. So let's look at the S&P 500 futures and break down what it is that's going on right now for the overnight session to give us some kind of understanding of where the day might be headed. So yesterday I was looking for some of the bear side. We did hold out the key region into the high 70s pretty well a few times, but we got too many sellers trapped in the middle of this larger distribution. Right now what's happening is that we're seeing a constant bid off of that 80. We managed to rally from that 80. You can see this is the top band of the distribution, right? High 70s to low 80. And as long as that area holds, we could see some upside. Now, what I'm looking at here is the overnight. We failed around the 90. We're starting to make the move higher. Around like mid 90s or so is a pretty large area where sellers came in a few times around, especially once we start breaking that down into the Sunday session. So right now we are in an area where prices are imbalanced to the upside, suggesting that there could be more continuation realistically for the bullish pressure. The bears, they got super stuck yesterday. They had their chance for 2 days in a row. They got slapped, they got beat up, and now is the bulls' time to shine. Realistically, as I look at this, I'd still want to be a buyer above high 70s, 80, right? First area is probably going to be the low 90, which is pretty aggressive, targeting areas back up to the 46, 07, 09, 23s, right? To see if we can get those legs higher, because these bears have been completely extinguished. They got super trapped. We had a lot of buyers through that 76 area yesterday, and right now this buy pressure that's coming in, it's looking pretty strong. So I was looking at tech as well. Tech yesterday, I thought we could share some weakness because there was decent rotations outside of tech, especially on the Sunday session, right? Over the last few days at the end of last week into small caps, showing tech weakness. But right now, we're coming back for the upside. Tech is still weaker than the S&P 500, right? Tech having NASDAQ, I should say. So if we start moving above that 16,040 area, we could start getting those legs back higher realistically. So that's the main thing that I want to break down. Can I tell for the day, we're going to open up our live trading room in just a bit. Can you tell me where can see economic news calendar of WTI? Probably like Forex Factory, realistically. If you type in Forex Factory on Google, it'll probably have a bunch of stuff on it. Or you can just type into Google WTI crude oil, and then you'll get that breakdown. So that's all I want to talk about today. I'm a little more bullish as long as we're outside of the distribution block on the S&P 500 as well as the NASDAQ in general, just like equity markets. I do like that upside shaping up to start the session. Any reoffer under like 76, we accept lower, but it's like 20 handles away from where we're at. Faders are going to try to come out probably around that 4,600 to 4,606 again on the S&P. They might come out into the mid 90s as well. So let's open up our live trading room. Let's break that down, and we'll see you guys all there. Thank you.